Kia ora whānau. Banks create money when they purchase securities. And that's all. To review this, simply pop back onto the site and click on the course, Banks Create Money. When you've gone through that program, you can come back onto here and we'll take you through now the important aspects around bank credit creation, important things for us to consider. I'd like to take us back to 1886, at the time of King Taawhiao, Te Tuarua, the second Maaori King, who established Te Pēkea o Aotearoa. This was a sovereign fiat currency issuing bank and a trading bank, but more importantly, King Taawhiao issued that sovereign currency. The purpose behind establishing this sovereign currency and trading bank was to produce bank credit creation through local community-based non-profit banking. Ultimately, the purpose behind the establishment of King Tawhiao's sovereign currency was to help the community, particularly those most vulnerable. His main purpose here was the relief of poverty. He was concerned at the state of the Māori tribes at the time, particularly in the area where he lived. And so he thought that the best way to do that would be to create a sovereign currency to be able to administer a good financial system to improve the standards of living of all who lived in that region. I believe that King Tawhiao's vision for Te Pēkea o Aotearoa and the sovereign currency is precisely the system that we should go back to, which is bank credit creation through local community-based non-profit banking. I believe this is a great vision for New Zealand. Now, banks can create money for good and for bad. What's the difference? Let's take a look. For good, bank credit creation can be used for what are called GDP transactions, or gross domestic product, or basically producing new goods and services, the very things that contribute to our standards of living, the things that we need in our everyday life, and the things that we need to develop for the future as well. But bank credit creation can be also used just for basically financial transactions, which are non-GDP transactions. This is basically just producing new money and shifting money around, and no new good, useful things being produced out of it. So on the good side, bank credit creation is vital. It enables us to access finance to produce the things that we all need, the things that not only we consume, but all the things that we want to produce, the things that raise our standards of living. So it's critical that we get access to bank credit creation, but for the community in general and the nation in general, it's important that it's good bank credit creation. So for new improved goods and services, new technologies, research and development, all those vitally important things. On the other side, bank credit creation can be used for speculation, basically loans for purchasing property rights. No new goods and services are produced. So on the one side, all the cool things that we need to develop as a society, all the things that we need access to, the good stuff, the GDP transactions. On the other side, the non-GDP transactions. Bank credit creation produce more efficiencies, more options, more marketplace diversity. And ultimately, because new goods and services are being produced all the time, it creates price stability. The other side, bank credit creation, as I mentioned, can be used to just bid with new money for existing goods and services and property. Good bank credit creation is non-inflationary. It creates more employment, increases living standards, and importantly, equality of opportunities for everybody in the community through a stable economy. The other side, it can be used to fuel inflation, lower living standards, more inequality for the most vulnerable too. And bank credit creation can be used in those instances to produce what are called asset bubbles, or basically more money being spent on goods and services. This has been experienced in the past through property crises, booms and bust cycles and financial crises, which all emerge through bad bank credit creation. Booms and busts occur when bank credit creation or extending of loans, new money into the system where it's competing for existing goods and services. When it's on the way up, it's fine, but then when it's realised within the marketplace that there is no value in those new goods and services, then we get the bust. Boom up and a bust down. This can create financial credit crises, recessions and depressions. Ultimately, it's the most vulnerable people in the community who are most hurt through instability in the economy. It's precisely the thing that King Tawhiao wanted to avoid. So, bank credit creation can be used for a lot of good, and it's vitally important that our system and our economy has access to finance to be able to do the things that we need to do to protect ourselves, to produce the food and all sorts of goods and services and all the things that we're going to be required to have in the future to meet our future demands. It's critical that we have access to bank credit creation, but more importantly, instead of the bad side, to the right there you'll see some good policy. So let's accentuate the good. So good policy for bank credit creation would be ban speculation or credit creation. So this is not banning speculation in itself. So allow people to speculate with their own private savings, but bank credit creation itself, new money being produced from banks, should not be used for speculative purposes. Bank credit guidance is important. So this is from the bank regulators. In New Zealand, that's the Reserve Bank, where bank credit creation can be used for good and credit guidance is established to ensure that banks are doing such. To promote more local non-profit community banking. So as local non-profit community banks are established, it's much more transparent in their activities. So it's very, very difficult for a local bank to do any outlandish or outrageous projects because people can see what they're doing. Also too, because they're not based on creating a profit, they're able to reinvest that back into the local communities. Also, the local community itself are shareholders and the owners of the bank. So they can all work as a community to produce the things at the right times that members of the community demand at those times. Also, more local community transparency and resilience. And they can ultimately, our communities can be less affected by international credit crises. A particular example in this century has been Germany, where now in Germany, up to 70% of banks in Germany are local non-profit banks. So during 2008, the global credit crisis had a lesser effect or impact on Germany, simply because over 70% of German banks were small, local, and not-for-profit banks. There was less risky speculative lending in the German marketplace. So when the credit crisis hit in 2008, Germany was basically unscathed. In fact, some of these local banks actually increased business. So bank credit creation through local community-based non-profit banking was what worked there. And this also was the vision behind King Tawhiao's establishment of his currency and his bank, Te Peke o Aotearoa. Let's review how King Tawhiao kept the view and the vision of community purpose behind the establishment of his currency, his sovereign currency, and Te Peke o Aotearoa. Remembering it was the relief of poverty and preventing poverty which was front of mind for him. As he looked out upon his tribe here, and you can see here, this is our Rohia Waikato, or within the Tainui Waka, but he also had a wider vision for the wider community as well. But basically, he was looking at what was best for the community. He understood too, at the same time, there was the British sovereign currency, which had been established in New Zealand, and he noticed how well that worked for the colonial settlers at the time. So he decided to establish his own sovereign currency. An important thing to note, and I believe that this particular rule that King Tawhiao established is very pertinent today and has relevance for the idea of local community banking. He established within the constitution of Te Pēke o Aotearoa an example of a rule for the bank that will protect the community. So rule 4, the committee, meaning the bank committee, may consent to any money being advanced for important tribal purposes. Funds will not be invested in interminable lawsuits upsetting titles already fixed by the land court, or speculations in general favour. What this rule means in essence is that King Tawhiao made it clear in the establishment of the constitution of his sovereign currency that it must be used to advance the purposes of the people. And also, he made it clear that there will be no property speculation. He didn't want new loans to be produced and bank credit creation to be produced just to compete for existing property titles. What that would do is just raise the price of property, basically a property price inflation. He wanted to avoid that. And also then the general notion of speculation. It was through that rule it's clear the intentions behind King Tawhiao's sovereign currency and his bank were admirable and they were about the community. Bank credit creation through local community-based non-profit banking was his vision. I believe it should be our vision for New Zealand as well. I think we can learn a lot from King Tawhiao, and I encourage all students to learn more about that example. So let's chat, pop me through an email, back onto the website, we'll talk soon. Kia ora whaanau.